We may never know, Congressman, whether those corporate tax cuts that we saw really were benefiting lower wage workers. And now I hear the narrative from the left is that we didn't see the capital spending that we expected. But you can't deny that we repatriated more from abroad, and that it looked like we were seeing some progress on organic wage growth. And here we are set basically to reverse a lot of that.
Yeah, Joe, there's no question that we achieved all those goals. 2019 is a great example. 2 years after we did the tax reforms and tax cuts, we saw the largest jump in household income in almost half a century. In fact, it was larger in 1 year than all 8 years of the Obama-Biden administration. We saw the lowest poverty rate in half a century as well. And in the same year, we shrunk income inequality for the first time as long as we can recall. And a lot of that came because of growth in blue-collar workers. We were drawing people into the workforce that had been forgotten. And as a result, we saw, sort of the social gains that we had all designed for in tax reform. That's why right now having the president propose a $2 trillion tax increase as we're working our way out of the pandemic. No president has ever raised business taxes to rebuild an economy and then to drive our rates worse than China's and on par with Syria's. At the end of the day, we're going to see slower hiring. We're going to see less investment in the U.S. And I would predict we will see a second wave of U.S. companies inverting or moving their headquarters overseas in the long run. That's why I think this is such a major mistake.
I don't know how closely you follow. I'm sure you know. Senator Manchin said, I don't like 28. There's a lot of talk about 25. Would 25 be still going in the wrong direction in your view, or could that be something that Republicans finally say, all right, we want this, we want that, don't do this, and we'll let you do that? Would that be a bargaining chip, 25, or that's still too high?
It's definitely the wrong direction, because since we lowered our tax rate and became competitive, 10 countries have lowered theirs. They're not standing around just because America decided to get competitive. And as a result, that draws more investment and jobs overseas. If anything, we ought to be making the Tax Cuts and Jobs Act permanent. And at the end of the day as well, looking at the Biden tax proposals, they make changes in the international rules that seem sort of in the weeds for most people. The bottom line is they end up double taxing U.S. corporations and workers. They punish them for doing research and advanced manufacturing here at home. And in effect, they make it better to be a foreign company operating in America than an American company. So they are going so far the wrong direction. There's so many jobs at stake here. Let's not compromise on rebuilding this economy.
So what would you do? Let's say that you become convinced that we can't cut our way into trying to pay for some of these programs, and that we do need to raise some additional revenue. Would you go back to 39.6 for individuals? Would you do something with capital gains? Would you are corporations just leave them alone and do everything on the individual level? Do you do a corporate AMT globally, something like that?
Yeah, all of those are big mistakes on economic growth. And incentivizing investment here in the U.S. makes no sense at all. What I would do is I'd go back to the drawing board and sit down with Republicans. Let's put together a real infrastructure bill. And then let's look at the user fees that traditionally pay for this infrastructure to see if we can find a way forward just in a fiscally responsible way. That's what I would do.
Shepard Smith here. Thanks for watching CNBC on YouTube.